Salesforce, a cloud-based software company's stock soared this week, reaching a high of nearly 70% in just one day, according to the S&P Global Market Intelligence data. Salesforce's latest fourth quarter earnings report completely toppled Wall Street analysts' expectations, propelling the firm's stocks upwards while the overall market despite the recessionary standards in the past 2 years. However, this wasn't always the case. From its all-time high of $307.25 in November of 2021, Salesforce's stock slumped nearly 60% till December of 2022 and has only recently regained some value. However, Salesforce is still approximately 40% below their November 2021 high. So what exactly happened to Salesforce? Salesforce's sales reportedly increased 14% year over year to $8.38 billion in the fiscal fourth quarter, which ended in around January 31st. This was well above Wall Street's average estimate of only $7.99 billion. Profits per share were $1.68, 23% more than experts' consensus forecast. These findings were the primary reason for Salesforce's stock explosion as investors became more bullish on the company's expectations for the year. Salesforce also forecasted 10% sales growth and 11% GAAP operating margins in the fiscal of 2024. This was actually ahead of the company's previous margin projection, while major Salesforce shareholders Elliott Management voiced that this sudden growth in operating margins was within his expectations. Although Salesforce's financial performance was solid, the company's management team, particularly CEO Marc Benioff, remains very unclear. The firm apparently pays actor Matthew McConaughey, a friend of Benioff's, $10 million per year to be a part of its creative team. Still, no one knows what kind of creative an enterprise software company needs to acquire a $10 million contract deal with a specific actor. Benioff has also been criticized for taking a 10-day holiday and digital detox in French Polynesia in the run-up to the company's January announcement that it was laying off 8,000 employees. With activist investors surrounding the corporation, there is a chance that they will demand a shakeup in the executive suite if Benioff continues to run unchecked. This may be beneficial to shareholders in the long run, however, as an internal management conflict may spell disaster for the company's short-term stock valuation. Salesforce trades about 5.4 times its sales projection for this fiscal year, with a market valuation of $186 million. It's not outrageously pricey if you believe that the firm can maintain a double-digit revenue growth while expanding profit margins. Yet, given the stability of the executive suite, investors should not expect easy sailing in the near future. Salesforce reported growth in every major product, including the still-hot Slack.com, an instant messaging app for business communications. Revenue at Slack has increased by 33% year-on-year to $410 million. Even more amazingly, Salesforce outperformed in terms of adjusted profitability. Non-GAAP adjusted operating profit margin was 29.2% in Q4, obliterating the 3-month projection for adjusted operating margin of 20.7% in the fiscal of 2023. However, Salesforce's earnings per share were a pitiful $0.21, which is quite low considering their excellent Q4 performance. However, factoring the firm's large asset portfolio and the growth potential of the cloud computing industry, a lower EPS is not the end of the world for Salesforce. So, what is behind Salesforce's unexpected profit generation? It turns out that the corporation has also abolished its mergers and acquisitions committee, putting a stop to the long-standing practice of purchasing smaller competitors. In addition, Salesforce's layoff of 8,000 employees would drastically cut down on overall expenses. Although the double-digit revenue and profit growth may seem like good news, keep in mind that the company is also sacrificing its asset acquisition and company growth in the process. Is it a good time to buy Salesforce's stock? Despite its recent rebound, Salesforce's stock is still roughly 50% behind its all-time high set in late 2021. Yet, this does not always imply that shares are a smart buy. We can also factor in the increase in free cash flow. Last year, free cash flow was $6.31 billion, a 90% increase, which is a very positive sign. However, the stock is presently trading at 30 times the trailing 12-month free cash flow and 27 times the projected 2024 profits per share. The board of directors also authorized an additional $10 billion in stock repurchases from the already planned $10 billion stock buybacks plan as a demonstration of confidence in their capacity to generate cash. Perhaps the company's past long-running tradition of increasing free cash flow per share will have a major comeback this year. However, the situation around management and overall scalability remains unclear, so we give Salesforce stock a hold for the short term and midterm. Wall Street predicts a 288% upside potential on penny stock Bionano Genomics, who produces optical genome mapping instruments for health clinics. With their array of patented sapphire technology products, Bionano has high potential of generating a significant amount of recurring revenue each year. Check out this video for the full breakdown and analysis of Bionano stock. Thank you for watching, and please like and subscribe for more videos.